as we continue to reflect on the last week that it was, now on the Saturday, 7th of March, we go back to Tuesday, 3rd of March, which was a big day as Reserve Bank of Australia has gone absolutely berserk. They've lost the plot. They've cut the interest rate, as we mentioned in the previous video, by 25 basis points from 0.75 to 0.5%, historic low. It's absolute madness. All those channels and people, the doomsayers, were correct. They've lost the plot once again, and they lost control. They are using methods that never worked for Japan, never worked in Europe with their negative interest rates, and they think somehow it's going to work here. It's going to create huge distortions, and in my opinion, people will just buy things like precious metals and will try and hide the money and put money in all sorts of different places just to be out of the system, and that's just going to make it worse for the system, not to mention that the confidence has been shattered because of it.
Will a historic new low for interest rates treat the economic symptoms of the virus as Australia teeters on the brink of a recession?
Now, this is what the opposition has to say, only because they're opposition. If they were in government, they would be doing exactly what the current government is doing. So let's not kid ourselves.
Whenever they cut rates, it's difficult for savers. It puffs up asset prices, and it's not been enough to shift the economy in a meaningful way.
So they always make sense when they're in opposition. But once they get in government, as I said, they change their tune. Now, I didn't want to play it, but they call this a rate cut as an emergency response. Sorry, I have to use sign language. That's how bad it's getting. But we will win. As Trump said, we are very, very ready. In the meantime, you have to put up with a lot of madness.
It slashed the official cash rate by 25 basis points to a new historic low of 0.5%. The fourth cut in 10 months, and the RBA says it's ready to go again. The Prime Minister had fired a warning shot earlier, saying he expected the big banks to do the right thing and pass on any cut in full.
This is a done deal. So the Prime Minister said you better pass on the full rate cut if it happens, as if he didn't know it was going to happen. So it was all set up. So we have to endure a lot of pain before we can win, as we are very, very ready.
Westpac was quick to do just that, cutting within minutes of the decision. Then the Commonwealth Bank followed in full. NAB and ANZ also passed on the full 25 basis points by mid-afternoon. It sent their share prices down sharply, but elsewhere it was a sea of green. The markets are once again riding high on central bank stimulants. The whiff of help from the Fed sent the Dow Jones up an insane 5.1% overnight, the biggest one-day jump since the GFC. Despite bank stocks being walloped here, the ASX broke a 7-day losing streak. Finance correspondent Philip Lasker has the story.
So for some reason, they've never done this before. It takes them minutes to cut and pass on the full rate cut to the mortgage holders, which is very, very unusual. They know they're not being profitable. Their net interest margin, I think it's called, is shrinking. Their overall margin of their business is definitely shrinking, and they're less profitable. Their share price is tanking. I think they're going to take the fall for the government, and you think, oh, why would they do that? Well, it's not them. Those CEOs of the banks and everybody else gets paid. The only people who will take a pay cut or haircut is the shareholders, and the shareholders are mums and dads, superannuation funds, which is again, that's us, mums and dads, ordinary people. They get paid. We just take the haircut. And the government is not to blame. Again, I don't mean the Liberal government, I just mean whoever's in the government. See, rate cuts actually don't stimulate the economy, because once you cut the rates, the interest in the economy drops. So input into the economy drops. It may give it a shot in the arm, but very short lasting shot in the arm and perceived to be helping the economy, but in the long run, it isn't.
Rate cuts are really in part designed to short circuit that really poor confidence and the downward spiral in risk assets, which can feed through to the real economy.
That can do it, but it's not going to do it because, again, it's going to help the confidence. How's that going to help the confidence? I mean, even the ordinary folks on the street know that this 0.5% official cash rate is just absolutely insane, the lowest interest rates in 5,000 years. Why? Yet the risk in the market is huge. The risk of you holding the money in the bank is the biggest that it's ever been. Yet all you're getting compensated for it is, I don't know, maybe 1.5% out there in the real world, and the interest rates being low. Interest rates should be the measure, in part, of the confidence and the risk. So the higher the risk, the higher the interest rate. So the risk currently is high, the interest rates have never been lower. So it's insane. And just to see that this all smells of a setup, absolute setup. Again, banks taking minutes to pass on the full rate cut, which they haven't done almost ever. And then watch this.
Prime Minister Scott Morrison took the extraordinary step of virtually flagging a rate cut before it happened.
Flagging a rate cut before it happened.
Pressuring lenders to pass it on.
On behalf of Australians, that if the bank had moved today, then I would expect they would do the right thing by those Australians who are looking to see any support that the Reserve Bank would be seeking to provide at this time for these reasons.
Imagine he was saying, look, if you were to cut the interest rates, please make sure, the banks, please make sure that you pass on the full saving, and then the Reserve Bank doesn't cut the interest rates. That would make him look stupid, and he wouldn't do it. He wouldn't say it if he didn't already know that the rates were going to be cut anyway. What does it mean for mortgage holders? As if savers don't exist. This 0.25% rate cut is going to save an average mortgage of $400,000, $60 a month. Now, $400,000 average loan is huge for a country like Australia. It's probably double that in Sydney and Melbourne, at least. So that's just crazy. Let's see what's happening in the greatest country in the world, or at least largest economy in the world.
The financial market turmoil intensified as the world's most powerful central bank, the US Fed, delivered a 0.5% emergency rate cut between its usual meeting.
That's a very unusual set of circumstances. The last time we saw that was really 2008 when central banks were starting to deal with the global financial crisis. So, I think it really underscores how worried central bankers are about mounting downside risks to global growth, or in the Fed's case, the US economy.
So they cut it overnight by 0.5%, out of cycle, not during the usual meeting that was supposed to happen in 2 weeks, and that made financial markets spooked. So again, what did the markets do due to this 0.5% rate cut?
To the markets, and Wall Street took little heart from a shock 0.5% rate cut from the US Fed. It ended sharply down. At home, weakness in banking stocks helped drive the ASX 200 1.7% lower. The Australian dollar has risen slightly after that US Fed cut. It's now just under 66 US cents.
Here's the case of what he and what she said.
Steve, the market down sharply here today. Overnight, Wall Street lost around 3% despite that whopper stimulus from the Fed, which was really directed at trying to calm markets. Why aren't they happy?
Yeah, interestingly, overnight markets were actually doing quite well until the Fed came out with that announcement, and then sold off quite heavily after the announcement came out. So I think a couple of things there. It's freaked people out that the Fed thinks things are that bad that they've had to make an emergency cut in interest rates. This was outside the normal cycle, remember. And I think you've also just seen increasingly bad news out of the US about the spread of...
Remember how I said they're going to sacrifice banks, at least in the short term? And by that, I don't mean they're going to get banks out of the business. It just means that their profitability is going to drop sharply. Their share prices will drop, and again, who's going to suffer as a result of that? And you know, all the people up the top in the bank ranks will keep the jobs. Some of the small jobs will probably be lost, and then the shareholders will lose, and that's you and me through superannuation funds and other means, unless we've protected ourselves. Have a look at the BBOZ on Australian Exchange. Just saying. Ticker BBOZ.
It's been fairly indiscriminate selling on markets up until now.
Yes, so back to banks being sacrificed.
Today in Australia, we saw the banks really get walloped again. They're off all around 3%. That makes sense given the rate cut. Are we now starting to see markets be a little bit more choosy and thoughtful as to what they're selling and what they're buying?
Yeah, very specific issues there for the banks. So they're passing on rate cuts, but a lot of the cost of their funding is in relation to deposits, and they can't put zero down any further on deposits. So their margins are getting squeezed by this low rate environment. We've seen that all over the world, and it's increasingly a problem here in Australia. That's specific to them. And I would say in general today, up until now, it has been widespread selling of everything. I saw even across my own portfolio a bit more discrimination between, okay, this is actually going to be affected by the virus. This is a pretty resilient business. This was perhaps already cheap. This was expensive, and saw, you know, green probably across a third of our portfolio by number of stocks today, whereas in previous days it's just been everything is down across the whole portfolio.
Okay, so yeah, that was I probably should have spared you that last 20-30 seconds, but yeah, banks. Watch the banks and watch my series on I told you so on the banks. Banks are not going to do very well in the short term. Will there be good value at certain time? Probably, but not after the property has had the time to absolutely cool off, not to say to correct, not to say crash. That call that I have, insane call, was set for 2020 for 40% drop. It'll take a long time and a lot of things to happen for it to actually be 40%. What may happen is that there won't be much liquidity, so it'll be hard to gauge what the drop is, but the selling and buying of property is probably just going to slow down as buyers are sitting on the sidelines while sellers who can afford to are just not selling. So that's the most likely scenario, but it's not going to go up. Just give it till the end of this year. Okay, that'll do for this video. Take care, everyone.